why should I buy this token? How does it actually connect with some underlying value? As soon as you tell them that, like, hey, you're actually earning a portion of the revenue when anything comes in, they immediately understand crypto.
So we're back, episode 67 of Internet Explorers. Just been trying to take in this new design and graphics situation that we have here. This is
it's great. CNN style.
See, I thought it was all the conversation around the score bug on the Super Bowl that led this to do this, but he said it was actually more Alex Jones coded. So
we're talking 1 part InfoWars, 1 part Fox.
What?
Oh, fuck yeah.
Just having a good old lot. I literally stopped myself from buying a Stream Deck, but OBS is amazing. Long live freeware.
I love it. Alrighty, well, I have no idea what we're actually going to talk about now because I usually use the sidebar to understand what topics are coming out. But I assure you, we have a bunch of interesting things to talk about. Some good threads.
You got a 3 minute. You got a 3 minute rundown. You're ready.
I had a 3 minute rundown. I mean, I don't need to see things. I'll just say stuff, so it's okay. But excited to have Brian Flynn from Boost with us today. Brian has been out there trying to meme revenue tokens into existence. He's even baited me into a few replies there because I think, what are you talking about, Brian? But Brian's always one of those guys that lives in the future, so you kind of have to pay attention to. And I think we're seeing the world kind of catch up to his thinking here. But I still have a ton of questions around what the fuck does he actually mean about revenue tokens and what it might be the really knock-on effects. So why don't we bring Brian up and we can actually get to the bottom of this thing. Of course, he's calling in from his therapist chair.
It's my therapist chair. That's right. When you're talking about revenue, you have to get ready. You have to strap in. You have to talk about things that don't exist.
So I think the shift in narratives to revenue mattering, I think, is one that we've all been watching and waiting for. And I think it's still maybe like in the pre-innings there a little bit. I think, there are chains that are actually making revenue, and there may be some big token buybacks, and the belief is that might shift the narrative a little bit. But you've been sort of all about revenue sharing tokens on the timeline for the last couple months. And so would love to kind of get to a shared definition of what that means, and then maybe for you to give us a bit of a sense of why you're dedicating your time to meming this into existence right now.
Yeah, for sure. So, I mean, revenue share tokens is explicitly that you're sharing your revenue with token holders. So instead of it going to a single source, you're basically saying you're going to redirect your revenue to a token contract, and that is split proportionately to token holders. And so the purpose of this is really just to align incentives. Everything we do at Boost has been sort of trying to create the most incentive aligned product. And the reason that we got here in the first place, and the reason that I'm dedicating my time talking about this, is because we receive revenue in native tokens from projects. And so if tokens are down only, then we're not incentive aligned to hold the tokens. We're just going to dump the tokens for anyone who uses the product. And so we're trying to figure out, well, what is actually the most incentive aligned model that is sort of what we call like minimum viable utility for people to actually do this. And I think, the alternative here is buyback and burn, which I think is, a substantial alternative that I think a lot of the big DEXs use, like Jupiter and Radium and so forth. But revenue share tokens is, I think a lot of people dismissed it as like, hey, this is something that is securities laws and regulations. Obviously, I'm not a lawyer. This is not, this is not legal advice, but, with sort of the changing, shifting over to window, as people like to say, this is sort of an opportunity to say, hey, well, what is actually the most incentive aligned positive sum model here that actually, shifts the narrative from, hey, we're going to be having this token that sort of loosely aligns incentives to now actually aligns incentives through code. And so that's what revenue share tokens are all about.
And so the, buy and burn versus rev share, can you maybe break down exactly
Sure.
what you see happening on like the rev share side of things, and like what are the different dynamics that those might create?
Yeah, for sure. So the difference between rev share and buyback and burn is that rev share is this more active thing that I like to have, right? So holders of the tokens actually see themselves getting payouts. You think of it as like some APY, so they have tokens or revenue to claim whenever revenue enters that token contract. So you can think dividends as like one aspect of this. And then buyback and burn is more of a passive thing, which is, hey, this is going behind the scenes. I see the token price is going up. Not actually sure as a holder why that's happening. Might be because retail's coming in, someone's pumping a narrative, might be something else. But really it's just the team that's taking their revenues, buying up token supply, and potentially burning itself, right? I prefer the rev share token stuff just because I think for a lot of retail users, buyback and burn is really hard to understand of like what exactly is happening. But now there's this supply. I have to keep track of like the supply dynamics and like there's this thing happening behind the scenes. It's like very complicated. But when you as a holder are getting these direct payouts directly to you, you're like, oh, I'm now a holder of this thing. Whenever there's economic activity, I get paid. That's a really easy thing to understand. And so that's why I think this is going to be the more common token model for at least the long tail of projects. I think there's going to be plenty of projects that still want to use buyback and burn, but I think for the most long tail projects that want to have some minimum utility, I think it's going to be for that.
And Brian, when you're thinking about this, are you thinking about this from like the long term kind of perspective of a token model? Like you think short term makes sense to hold this revenue, use it to invest in growth, and one day kind of flip the switch and turn this on, or do you think this is something teams should be doing from day one?
It's a great question. I think it's going to be very normal to like start with like minimum utility as possible, and then like bake in revenue streams over a period of time. And so it might be that actually you want to take a slice of your revenue streams and bake into token, and then later on may have more tokens be baked in over a period of time. Obviously, there's like no one size fits all model with this stuff. It really depends on whether you want decentralization, whether you want certain financing requirements, so on and so forth. So it's kind of a nuanced topic in some capacity. But I think what's really great about this model from day one is that it really gives an incentive for users to be a part of it from day one or as early as possible, right? So if I'm using a product and I'm earning rev share tokens for being part of it, now I'm incentivized to bring other users to the product. You can imagine an L2 that instead of transaction fees going to a single sequencer, instead of it going to now a rev share token, now I as a builder on this L2 who actually has this L2 token with rev share is now incentivizing other builders to build on top, right? So that's kind of the dynamic where rev share can really help.
So you're making the argument that the perception of direct value into a wallet or token, accruing revenue, is going to be more valuable than the speculative demand or belief that the thing will create more value in the future. I mean, I guess that's where the hang up I have is, I guess I have two questions.
Yeah.
The second is like, what's hard about doing rev share tokens? So let's put that off to the side. But I'd like to get into it. The other is just how, like if you took ETH and you just did a fundamental valuation based on the revenues that are being generated from that, and then added, like the most generous revenue multiple on top of that, do you think you get anywhere near to $450 billion or wherever the hell
For sure. Right now? Definitely not. Right. I think that's definitely not the case here. And I think like if you were to take all kind of like the speculative value that kind of goes into these tokens today, I think there's an argument to be made. Hey, just launch things as like a meme coin with sort of like a promise on something because you'll get a higher valuation towards things. I think that meta is kind of dying. We're kind of seeing this with sort of like L1 tokens that are kind of being launched. It's like clearly the trend is like shifting towards like everyone was sort of like playing that meta. And now like there's still this window that exists, but it's clearly shifting towards like, hey, you can't just like meme things to existence of like the speculative value. Like there has to be some shift of fundamentals eventually. And so I think like clearly things are headed in this direction. Only a matter of time until we reach a point where things are actually based in fundamentals, like kind of the traditional markets. And so that's kind of more of the argument. It's sort of like a timing question here.
Okay, so
yeah,
what's hard
go ahead. I'll go.
Well, I'm just
going to ask it. if boosted, you guys don't have a token out yet, right? If you launch a token today, do you feel like your revenue's in a spot for this to be interesting, or is this something that you would be pushing down the road?
We would probably launch it with rev share at some point. I think it's very normal for teams to like launch with basically like no like very to little like utility on day one, and then once they have a certain spot, basically turn it on to have those shared incentives. And so that's probably how we would do it. Now I think it's very different from like how you would do it as a team with no funding, right? And basically wanting to share it with early customers, and how you would do it with existing funding. Like those are very two different playbooks. Like I think if we were to start Boost today, I think it would be very different. I think we would actually launch a token like pretty much on day one. But I think it's very different when you have like an existing cap table.
So what is hard about doing rev share tokens right now? And my assumption is you guys have built some tools to make that easier, but what's hard and what did you build?
So from a technical perspective, it's very simple, right? Like all it really is like, think like a splits contract, that basically says, instead of it going into like a certain recipient address, now it goes into the splits contract, then that, shares revenue with existing token holders, right? Now, you just need users to understand like, hey, here is a place where I can claim my tokens from this contract whenever revenue kind of goes through it. So from like a technical perspective, like this stuff is like super, super simple. We're talking like, hey, this is like something that we can, spin up in like a couple of days, right? Obviously, securities concerns is the number one thing that people always say when they see rev share tokens, right? And I think rev share is sort of the meme of it almost is like, hey, it's so explicitly like a security in some aspect. That's why it's like kind of like glaringly obvious. But it's also the model that actually is the most incentive aligned when you think about it, right? And so that is kind of one of the biggest discussions I have with teams is that like I think one of the things that you'll get all these token skeptics say in crypto is, hey, I'm never going to launch a token because like tokens don't make sense. But as soon as you basically get to a point where now like, hey, what if you can actually share revenue with your customers? There's like all these infrastructure providers, RPC providers, wallet providers, L2s. Like if they had a rev share token, they would be able to win over customers much more, right? Because that means that I'm going to use this wallet provider or this L2 provider or this RPC provider because I'm actually earning tokens and going to give me a rev share for using it, right? So it kind of shifts this customer dynamic from I'm just a consumer of this infrastructure to now I'm an investor in this infrastructure, right? Now I want to actually refer other customers to now use it as a means of because I'm going to generate value as well, right? And that is why this new dynamic kind of creates this new type of customer relationship, which I think just makes the space prioritize these fundamentals much more.
I mean, it's the shift that we've been waiting for. Anybody who's been building over the last 5, 6, 7 years, getting to a point where there's line of sight or belief that you can actually go do the thing, which is, the explicit value share back to the tokens. Is like, I mean, everybody's running at that as like I wouldn't say a sure thing, but they're running at that opportunity right now, and I think that changes everything for sure. And I like how you sort of broke it down in saying like there's still this very speculative era for any project that's coming out, and contextualizing rev share is sort of like the resulting values alignment mechanism once some level of success is hit or traction is hit. I think that makes a ton of sense. I'm curious, I think Django over at Juicebox has been, trying to meme rev nets into a thing. Seems very complicated, etc. But like, where else are you sort of looking at as sort of centers of influence or exploration around rev share tokens?
So I think the really interesting thing about rev share tokens is like, well, how does it change investing dynamics in general with crypto, right? And I think there's this concept in sort of Web 2 land, like revenue-based financing, right? Which is when you have these like fixed costs and you have a very clear product and revenue that you can essentially get a loan and you're basically getting financing up into a certain revenue target in which now basically the debt is being paid off, right? And I think there's a whole host of products in crypto that actually don't need VC financing, right? It doesn't need the 10x, 100x return, but there actually is products that need some capital up front, and now basically are looking for maybe a smaller return. But I think we're getting to the stage where, especially as things shift to the application layer, seeing lots and lots of founders, and I have these conversations with founders all day, that basically want to build a product on an applications, but that are not big businesses and are looking for alternatives. Like, what else exists besides VC? And if they were actually making revenue, then they could tap into these new forms of fundraising that's actually based in sort of fundamentals much more, right? And so I think once you start having these token effects where now you actually have this shared revenue, it's easy to start tapping into existing DeFi primitives, right? So you can imagine, someone building some revenue share based financing marketplace where it's saying, hey, I'm a developer, I'm making this much revenue, and I want to get some funding for my project. And maybe it's a direct loan that is being created on chain in smart contract, where now it is, generating that rev share token and is paying back, up into a certain revenue, right? So I think it opens up the amount of things that can exist from a DeFi perspective and fundraising capital formation perspective once you kind of shift to this type of token model. And so that's where I think things get really, really exciting. I think people are already looking for, well, what are other types of fundraising that can exist with this type of model? And so those are the conversations that I'm having with other teams.
I like piece if you scroll up to Retardillionaire parody account. Big doubt. Most people don't buy stocks because of dividends. Also, dividend-paying stocks underperform the S&P and trad markets. I think in hearing you talk about it, I think really what you're articulating for is like a new type of asset that exists in many other contexts, but are very burdensome, friction-full. Moving it on chain actually does unlock a long tail of interesting things that are composable. It can be sort of embedded in multiple different products. And this sort of speculative, big opportunity might run at for tokens still exist, and they actually probably exist alongside each other.
Yeah, and I think the interesting thing to note here is, Vlad from Robinhood had this great post in Washington Post a couple of 2 weeks ago about like tokenizing basically anything and how that world is coming really, really fast. Where local retailers and sports teams and people have tried this stuff in crypto for years, but like it's never been possible because of all the regulatory hurdles, right? And it's clearly a thing that's like kind of like moving in this direction, and so. I think that there's for this long tail of tokens in a world where everything is tokenized. I think this is going to be how most people will kind of like understand tokens in the first place. Because if you talk to the average retail person and you're like, well, why should I buy this token? How does it actually connect with some underlying value? As soon as you tell them that, like, hey, you're actually earning a portion of the revenue when anything comes in, they immediately understand crypto. Like, you can just battle test it with any friend that's kind of a normie. It's like something that's like super easy to understand. And so that's why I think it's going to be, especially for this like tokenized future that we've all been sort of working towards for the past 8 years. It feels like we kind of like took a detour in the last 7 years or so and kind of got nerd sniped. But now we're kind of coming back full circle.
Bureaucracy sniped, baby.
That's right.
Bureaucracy sniped.
I think there's also a pretty interesting opportunity to just like if the goal is really to economically incent or align token holders and the business to kind of dynamically kind of change or flip between paying out like rev share and kind of token rewards. If you're in a bull market, everything's running hot, clearly your token's overvalued, like paying out in your token is probably more appealing and holding back revenue for probably the bear market that's coming. And then in a bear market where you think your token's kind of heavily undervalued because the economic conditions are just shitty, like paying out in revenue maybe makes more sense. So it's just kind of a cool way to really like manage the assets that a project has.
Yeah, for sure. And I think it's normal that there is this like oscillating factor between like sometimes rev share is going to make sense. Sometimes there's going to be like no rev share. And I think going between, this equity like thing and this loyalty points thing is going to be kind of the way. I know you saw this tweet, Jess, but I think that's going to be the way most projects think about tokens in the future. In the same way, like, when do I increase supply? I think most teams in crypto think of this like the pie chart in terms of we're always going to have fixed supply. We're going to divide things up. But like eventually, everyone knows that like you're going to have some level of inflation. You're going to mint new supply.
Derivative projects,
pie
baby.
Kind of in itself.
Just give me another 10K PFP project. It'll
That's
be fine.
right.
It'll be fine. Yeah, I mean, it feels like, so much of the work that I've seen founders do over the last month or so, or 2 months, has been unlearning the limitations that we sort of imposed on ourselves as we try to manipulate ourselves to fit into our understanding of what the regulations may or may not be. And so I think, getting Genslered and ungenslering yourself is things that have popped up quite a bit in conversations. And I think if you look at it like from a just purely first principles, perspective here, delivering value back to token holders is just like the thing. I still am not convinced that like dividends are ultimately the thing, but I do like that embedded in your answers are really just like a lot of optionality and flexibility. And this is an additional tool, not as sort of a replacement for things. And I think also probably makes the most sense of seeing like, I still see like a core asset with like a buy and burn being, even in the replies that you got to this tweet, I think it's like clearly the market winner as far as like perception.
Right.
But as you go and do other things, being able to generate revenue that comes back from those specific things, like, it's like a new type of dynamic that you can experiment with around launches, etc.
Yeah, and I think a lot of this comes back to a user experience question, because the thought exercise that I always talk about with other founders is like, if someone has 1,000 tokens in their wallet, which is clearly like the trend that we're gonna have like so many tokens in our wallet. Do I want to keep track of every single tokenomics for every single token in the wallet? I don't want to have to think about that, right? All I want to see is how much am I getting paid per each of the tokens that I hold, right? Like if there was an easy way of seeing that, then that would be sort of the primal user experience, right? So that's kind of how I have backed into
I think
that.
people just want to see token go up. That's the thing. I'm not sure revenue on those tokens is going to like.
I think you just end up dumping 99% of them because the revenue you're earning from them is is horrible.
Well, I think this gets to the crux of all of this, right? Which is like, when we have a world of thousands and millions of tokens, like, does the speculative value of all these long tail tokens actually hold up? Because its attention is so fragmented. Or are we going to get to a world where like, hey, it's going to be more of a fundamentals-based business? We haven't really seen that world play out yet. And I think like this is sort of the transition period from the speculative world to more of this fundamental world. And who knows, this might take years to play out, really. Like we don't really know where we're at in this cycle. But the sort of the bet here is that when you do get this world of this huge long tail of tokens, it's going to be really hard to sustain that speculative value, right? And so that's where it's going to be like sort of this debate.
Yeah, I think really these are all just like growth and user acquisition levers that you can play with, right? And I think even what like Hyperliquid is just buying back and like reserving, which I think in the early days of a product is a smart strategy, because then you have a lot of people seeing that, there's this like growing pool that they're going to use to reward and incentivize usage over time. So instead of just holding and earning revenue or holding and seeing the number go up, I'm also holding and wanting to use the product because I believe in this thing and want more tokens. So I think there's just so much to play with here.
Yeah, for sure.
Nice. Yeah, Brian, maybe while we have you, you've also been tweeting about the need for a startup token launchpad, and I think this is something that I think is just started to kind of enter the meta or zeitgeist. I think something we talk about a lot. So curious on your thoughts around that.
For sure, yeah. I think Jess and I we talked a lot about social tokens back in 2020. I think social tokens were kind of the original meme coins, like kind of in some context. But I think when most people launch meme coins today, really what they want to do is like they're really kind of like championing like some movement, right? But like most of them don't think about it as a startup. They don't think about it as like, hey, I need to like build value for these things. It's less like, hey, I just like believe in this thing, right? And some of them get kind of caught up in this like well, now do I have to like hire a team for this? Like I have to people in my team, or like, and then people get mad when I have to like pay expenses and so forth. And like, what Pump Fund did really is like, it kind of, I think one way I saw us framing, it's sort of like the Craigslist of Launchpads. It's kind of like you have people in there that are creating, startup tokens, project tokens, and also meme coin tokens. And like there is no differentiation between the two, right? And I think there really needs to be, if we are entering this regulatory environment where like more things are possible, we sort of need to see more of like the coin list, that the echoes kind of move more on chain, where like now we have more frictionless ways of actually investing and raising capital to do so in the first hand, right? So I think this is what a lot of projects are really looking for, is what are quick ways to kind of get capital and also be very intentional about who I get as people, instead of trying to get from like, someone who is already existing on some other platform, like a coin list, for example. So I think there's just lots of opportunity here just to kind of experiment with new ways of fundraising in this environment. So that's what I'm excited for.
If you were to launch a token today, not for your project, let's just talk about this in an abstract way. And you've been a pretty big critic of airdrops, historically. How are you launching a token today? Like, or what are like what would you be designing?
What is the projects that I'm working on?
Let's say that you have a lovely startup token Launchpad that wants to have a token for day one. There's some revenue that's going to come out of it. You launching this thing on Pump, or are you just rolling single-sided liquidity pool? You try to do some Dutch auction fanciness, like.
So first I'll look at like, what is my current user base? If I have no users, I'll probably be like, well, how can I get as much? I mean, attention is still going to be important regardless, right? Can't say attention doesn't matter.
Let's just say you have a moderate amount of attention. You're set up well to go launch a token, but I think there's a bunch of options on the table.
I think the most important thing is like, how can I have an early set of users or customers who have skin in the game to like make this thing successful? It's really about employing your community and your users to make the thing as successful as possible, right? It's really about like how can they make sure that they have sufficient upside, and in a form of like not just like these loose. Like, hey, they get liquid tokens and now they're going to dump, but now maybe it's vested in some capacity. Maybe it's rev share. Those are the things that I'll start to think about, where it's kind of more of this like, 3-3 prisoner dilemma type game, where like they have to figure out how to sort of like solve the puzzle together. They're kind of like stuck in the room together, and now we figure out the way out. That's sort of the relationship between like the project and the users and the customers, is like, hey, I think of it as like an escape room. Like, hey, we're kind of like stuck in this thing together. Let's figure out a way out together. I know we don't really know each other, to begin with.
You kind of hate me, but it's okay.
Yeah, I mean, that is really what it comes down to. But to answer your question, I think I would think about it from that perspective, and then back into it. Well, okay, what are the types of activities we'd want them to do afterwards and keep them engaged over a period of time? Something that
Right.
we do at Boost is make sure that there's like a continuous incentive opportunity. So daily, weekly ways to come back to the platform, not just a one-time airdrop as well. And so that's a lot of tooling that we built.
And you would YOLO a token much earlier in the process?
For sure, definitely.
And what's the intention behind that?
I think it's a great way of just building an early group of supporters, and having people that have skin in the game to kind of get your back.
Yeah.
That's really all it comes down to.
That has been one of the things that's been talked about a lot more recently too, is just like when you say skin in the game versus airdrops, like the idea of people buying tokens and the average cost basis for your token holders going up, and that being the general trend that you want to incentivize for, versus what we've seen from a lot of these more infra launches recently, where you're basically saying to your best long-term supporters, man, you should have dumped this token right away because it's down 70% since then, and then just bought it back later.
We're seeing this with some of the L1 stuff too, right? Which is
all of them.
People are creating incentives to not to sell.
Oh, man. Yeah.
Instead, we should be creating incentives
to buy.
For people to participate. So it should be flipped on the way around.
There was a tweet.
It's all just it's momentum. It's momentum management, right? And when your momentum's going the wrong direction, it's like the inertia of down and the inertia of up is very real. And correcting course when it's down only and trying to convince new people to buy or new people to come in and participate is very hard. So, yeah.
I think you shared a tweet the other day, Josh, of like a bunch of the broader infra tokens that are down 80, 90%. I mean, they're still trading at large market caps, and that's the entire strategy behind launching that way. So like I won't say it didn't work, but it's definitely not the dynamic that makes anybody want to go buy on day one. Like you'd be a dummy, big dummy to go buy on day one on these things. And I actually like being a day one buyer. That's my preferred way of existing on chain, is to be a day one buyer. But just, I guess, when they come to market like that, you're not a day one buyer. You're a day 600 buyer. And
exactly. You're just like, I'm just gonna wait and see how this thing plays out. No, no incentive to jump in and get conviction in this chain or play with the products or anything, right? You're just, yeah, exactly.
I think Peace has figured out a solution to your memeing though, and Cash Cannon is better than revenue share token. So there you go, free value for you here. All right, man, let's leave it there. I know you got a plane to go catch, and I love that we almost broke your voice here talking about rev share tokens, but you powered through, so we couldn't get you. The next time I'll get you.
All right.
Go check out Boost, and just follow Brian on the Twitters because he's on one recently. And my favorite is watching like the views on your tweets slowly start to build as people start to come around. Like you're out here talking, 7 people care about rev share tokens, and now we're into the hundreds or thousands, baby. It's
all right.
Momentum management, man. I love it. All right, Brian, thanks for jumping on and demystifying rev share tokens for me personally and hopefully for others.
Take care.
See you, buddy. Peace, man.
Yeah, I mean, the thing I have like the softest spot for in my heart is like on-chain vending machines. It's why I love Neelastics. I bring it up all the time. It's just so nothing, but it's the idea of this like code that can exist out there on chain, and as long as the chain is running, it can create value. Yeah. I'm reminded of that Bitcoin gambling game, whatever, I can't remember what it's called, but something that's
Bit Crash or something. No, that's not it.
Something like that. It's just
good
like
name.
Good name. But it's just this thing that just like people keep eating like hundreds of thousands of dollars.
Bust a bit. Yeah, it's made like $500 million in revenue or something over the last 10 years, and the site hasn't changed. It's just printing money. Yeah, this is it.
And so to me, that's like the thing. And then when you get into like rev share tokens around that gets very interesting to me. So I think there will be. Yeah. I mean, we'll probably talk about it in a later topic, but like a lot of places where you just bringing the revenue on chain and being able to distribute it more efficiently is going to be a pretty big opportunity.
Yeah, like these like no external dependency smart contracts that can just pay people over time that are holding tokens using the product or something.
Yeah. I mean, you could sort of see that as being like a business model for open source SaaS, etc.
Yeah.
Which I think is interesting.
This game's hilarious.
I'm in a restricted region. I'm browsing raw right now. No VPN.
Well, that's probably for the best, because how much can you actually, if you can click through and show how much has been spent on this thing?
It said 2,300,000 Bitcoin.
Bitcoin. That's billions of dollars right there.
That is
phenomenal.
This is like what Sailor's holding. It's dope.
Anyway, it's wild. Gambling. Good business in crypto since day one.
Yeah.
Love it.
Since 2014, and these icons are very 2014. It's kind of amazing.
It's great.
I mean,
you really don't. Yeah, you don't need to fuck with it at all. I think we're gonna look back, Pump.fun in 10 years. We're gonna be like, they haven't changed this site at all.
Look at this. The Crypto Gambling Foundation, provably fair. That's an amazing stamp to have on your website. I'm in the way.
You're in the way.
I love that piece is back on stream. It's great. Yeah, let's go to the consumer crypto opportunity that's been up here for 37 minutes.
That's kind of what we've been talking about.
It is. I mean, it's really all we talk about. But yeah, this was a good thread from Peter Pan. That I always like these threads that just kind of zoom out and look at the big platform shifts of the past and remind you of how like not inevitable these things felt at the time, or how much they were like overlooked at the time, or how much they just felt like toys at the time. So he kind of just like goes through, talks about how like new winners always emerge from these important platform shifts as startups build from the first principles of what's now newly possible. Yet incumbents, inevitably misunderstand the opportunity, or just too slow or incapable of reacting. So he used gaming and kind of the shift to mobile to highlight this. So, mobile gaming initially was just like easily dismissed by incumbent game producers because their lens of what gaming was very much anchored in these immersive experiences, expansive storylines, high fidelity graphics, and then obviously what they missed was that it just allowed people to play games from anywhere, which unlocked this entirely new and ultimately like much larger market of casual gaming. So the studios and like games that won in this casual kind of mobile gaming world looked nothing like the ones of the past, and ultimately pretty significantly disrupted them. He then kind of went on to look at online video and entertainment kind of through a similar lens, where shifted from cable to online to mobile, and ultimately like the types of content and creators and businesses that thrived in each were very like native to the platform and looked very different from everything that came before. So he pretty much just proposes that blockchains are another one of these platform shifts that are just inevitably going to lead to new winners across gaming, social, betting, kind of all the consumer categories we know and love. And yeah, I mean, but we obviously agree. I think have deep conviction that we're the next era of the internet is going to be dominated by companies that win attention, build things people want to be a part of, create financial opportunities for their users, and the superpowers that crypto native builders have to go serve those things and win those things are obviously pretty powerful. So I think just good thread. He also, please pull up the other tweet he dropped, because he also goes on to kind of talk about the opportunity that crypto products are, that kind of consumer crypto products are going to have to vertically integrate and ultimately like consume more and more of the stack. It's something we think a lot about and talk a lot about. But then I don't know, I looked at this thread and I was like, fuck, is this really what we want here? Like I understand the opportunity.
I don't,
but yeah,
I don't think that opportunities is. I mean, the whole thesis here is that transaction fees on your own chain is going to be a major revenue driver for. Because if you look at all these on the left side, it's like project that has got great speculative demand, early community believers, with the the exception of maybe a few, no meaningful revenue, and then or meaningful revenue that's dependent on selling derivatives of one asset. And so you step into the infrastructure play there. Now there's a belief that, okay, well, we get other people building on top of here. There's economic value moving through. We'll be able to catch a piece of that. And it feels like some of these are more likely to go capture that opportunity than others, probably mostly the financial ones.
Yeah.
But I do think I mean, there's probably layers of abstraction below this as well. And just given how interoperable, composable all these things are, if you have a big brand and a user base that wants to, stoked on it, yeah, vertical integration is real. It just seems to be all around that sort of continuing on the speculative game of like L1s, that narrative, and then some hope for future revenue. And I'm not sure that plays out in the way that that Peter's sort of articulating here.
Yeah, I agree. I do think there's going to be a lot of cases where like platform opportunities, and like you go build a killer game and then maybe a platform opportunity emerges for other people. You aggregate the right user base and other people want to come and tap into that. But yeah, I don't know. I go back and forth from thinking we're going to be in this world with thousands of chains and thinking, oh, actually, there's going to be just clear power laws that play out here, and interoperability is not going to be as solved a problem as people think it is. And
any of these ones that are trying to go after general purpose L2s, I think will struggle more if you have like a revenue model and a need for a custom environment to kind of optimize for, then running. So I think an app chain is very different than a general purpose L2. I think the app chain demands that there is actual economic value moving through that you can sort of earn from. It's less relevant. Like the sequencer fees are less relevant on a general purpose. It's all about your sequencer fees. So like Hyperliquid or Binance or even ENS, right? These things are all generating revenue. The chain isn't being measured on TVL and net new things that are being launched on it, etc. It's very different from Pudgy, very different from Azuki.
Yeah, like if you're at the point where you're doing so many transactions that you can just improve your margins by owning the infrastructure, then great, that makes a ton of sense. But
which is a lot.
Yeah,
it's a higher bar and also lower than you might think. It's interesting. I mean, the problem we talk about consumer cryptos, it's just like crypto is consumer.
100%.
You know, like
P2P, baby.
You didn't pop up on that one. There we go.
That's what we want. Peer to peer, direct to customer.
Well, it's interesting.
Organic,
people complain about or give Uniswap a hard time about like the less than $2 million of TVL that's on Unichain, and then it's like, is that even a relevant metric for them? I don't know enough about how it works to. I know that I sure as hell didn't want to go bridge ETH to Unichain to be able to go and transact on pure markets or whatever. I was like, that was a bit too far for me.
I mean, I think they actually have. At Cheryl's Christmas party, I was talking to Hayden a bit actually, and I think he actually has a pretty unique view on what Unichain is going to be. And you know, he's pretty bearish on just like general purpose L2s, but we're talking a lot about how like the value of app chains and actually not having everything happening on that chain, and how you can just like you actually if you have an app chain, you actually don't want a DEX to exist there, because then like the like lowest cost of transaction is going to approach like the arbitrage value of being able to swap between chains. So he's like, if you're optimizing for consumer experience, you want the cheapest possible transactions on your chain, and you actually like don't want all of this other activity happening there.
So that's why there's.
But also like the way they're talking about it, looks like they are trying to convince everyone to come build there. So I don't know if that was in practice how they kind of are approaching this, but it made sense to me.
I mean, I think the honest reason why people are launching these chains is in large part speculative value they think it will bring to.
Of course.
I don't think that's enduring, and so that's why I think there being some more utility focused reasons for it makes a lot more sense. But how do we end up in this fucking back eddy? Jesus. L2s,
let's
consumer crypto.
Let's move on. I mean, all roads lead to L2s. Let's go to like talk about pictures with market cap. So Zora's been pretty quiet recently. You know, probably suggests they're cooking on something new. I think they just consistently go through these periods of rediscovery with their product as they kind of try to figure out the right model to serve creators with. And I think this week it seemed like Jaku kind of, you know, woke up or lifted his head back up and dropped a bunch of tweets that I think were just great in their own right, but also kind of suggestive of what they're thinking about and potentially where Zora's going. So yeah, figured it could be cool to look through some of his tweets and then maybe kind of guess at what's coming. So yeah, I think like the thing that I just continue getting stuck on. So, you know, I buy all of this, right? Like, you know, pictures, the fact that like a picture can have $1,000 market cap and is an amazing thing. You know, I think crypto degens are very much in this like kind of binary mindset where something either needs to be a $1 billion asset or it needs to be a $0 asset. And I think if we can figure out a way for there to just be lots of price assets with appropriate market caps, I think that's going to be a really interesting internet. And there's a lot of kind of adjacent benefits to having that. I think the place I just continue getting stuck is like, is the speculative game, right? It's like, why would I hold something that has $1,000 market cap and no hope to 100x from there? I think it kind of gets back to that, like, you know, why collect, you know, why hold these NFTs that are kind of, you know, out of the attention cycle. So I think that, you know, continues to be the question they're trying to answer. But
yeah, that's sort of kind of where it falls down for me too. But we were talking about this earlier today. It's just like what how do you structure markets for low liquidity assets in a way that are compelling over time? And it's actually a pretty complicated thing, because you think about distribution, you think about the actual liquidity that's being locked there, you think about the asset type, token, etc. I mean, the thing, and we got to get these guys on. Courtyard continues to be at the top of the OpenSea listings, right? And so what are they selling? They're selling graded Pokemon cards, maybe more. Pokemon card with $1,000 market cap is a valuable card. And it going up to $1,500 or $1,200 or whatever is still seen as a fun game to go play. And so how that works with it feels like NFTs or collectibles are a better market structure for that type of thing, given that there's sort of perceived value in the overall collection, which is, I think, where almost all these things fall down ultimately. And so I think ERC20s are just a far better tool for capturing value trading. It's kind of just like it spreads the furthest, it's the easiest to engage with. So if they can figure that out, I think that's interesting. I did like the tweet that he had where he was talking about it's something in the short term, information markets in the long term, attention markets in the short term, information markets in the long term. I think that's an interesting consideration. You talk about just like the bubble or hype for speculativeness around attention, and then but what's the quote? It's like, in the short term, markets are weighing machines, and in the long term they're something else. I can't remember. The idea is that you might be mispriced in the short term, but ultimately the long term is where the information lies. I think it's a useful way of thinking about emergent new assets that have an opportunity to go on and be more enduring. And whether.
But how do you think? I just struggle to understand how things with no attention have value, at least within the current structures.
Well, they have some value. There needs to be some attention. I don't think he's suggesting that there isn't.
Yeah.
My guess is they come up with something that is just a very opinionated way of getting small amounts of liquidity in and around tokens. I don't know how they go do it. Tons of revenue.
I think the
shares happening in there, and then a token that comes out over to sort of tie all those things together.
Yeah, I think the obvious thing is that WoW hasn't really worked. Whatever, meme coin launchpads on base just continue to struggle. And then I think this like hybrid NFT ERC20 model, I think, was just kind of overly confusing to both sides. So I think, probably simplifying that could do something. Who knows?
I'm just excited to see what they come out with. Surprise me.
Cool. Yeah, let's jump to this slow creator fund. So Sam Lesson this week, who the jelly guy, most recently announced a new fund from his firm Slow Ventures that's focused on directly funding creators. So it has it's not a new idea by any means, but I think the way they're actually doing it seems pretty new. So what they're doing is they're basically creating and investing in a holding company that both receives like all founder equity in any spin-out businesses they create, but also has the right of first refusal to invest in them. So really, like, their core thesis is that there's a new way to build great companies on the internet that actually just starts with creators building community, brand, and trust first, and then layering on companies that serve their specific community's need. And we've talked a lot about this. It's core to our like build something people want to be a part of thesis. But I do think it's cool that instead of just waiting for the businesses to invest in, or the businesses around creators to emerge and invest in those, they've kind of figured out a structure to find emerging creators, give them capital they need to like really lean in, and kind of trust that the opportunities for great adjacent businesses will emerge from there. But you mentioned that they've been like kind of experimenting in this field for a while.
Yeah, I think they might have just put a portion of one of their last funds towards this. Like, they're sort of the two non-consensus investment lanes that they've been exploring are creators and franchises. Interesting. I mean, I think that the issue with how creator investing has been done previously was that you don't have an entity until somebody wants to go launch Prime or wants to go launch happy dad or wants to go launch cars and bids, and then the entity is created, and then you're kind of coming in around that. And so it definitely doesn't allow you to kind of have it works for established creators, but the economics are probably not ideal for VCs, etc. So their ability to create these holding companies with standard terms and the ability to kind of like have confidence in sharing the upside in things moving forward and not having to do a million independent deals, very smart. Yeah, I think this is going to be successful for them.
Do you know how Workweek's doing? Because they've kind of been running a similar model. I think much more managed. Like they essentially like bring creators into their world and help them stand up newsletters and adjacent.
Yeah, I think Workweek seems to be wanting to build the professional network side of things, and so it's they stepped away. From my understanding, they stepped away from big creator-led things because it's really hard to scale. There's a lot of variability in it. You have key man risk. It's very hard to like continue to offer enough value to maintain that relationship long term. So once your contract's up and you've just helped them go become 10x more popular, you can't afford them anymore, etc. And so it makes sense they go after a software opportunity, which I think they're seeing some pretty good success in. But I think the ability to actually invest in creators is the thing that I think Sam and team are unlocking here. So
just treat them as entrepreneurs, let them go build whatever they think they need to go build.
And I think have a vehicle to be able to actually capture that value over the long run. So, yeah, I mean, obviously, it would be value if you back tested it and said, if you got into the Nelk Boys or into Mr. Beast or into any of the top 10 creators that have come out and launched businesses, it probably would have been a very lucrative thing. So, yeah, interesting.
Yeah, cool.
The jelly chart just being posted under. Can you make it again? The original.
He's never going to get away from that. Yeah.
He's got at least 5 more years of this. 5 more years of when marketing.
Incredible.
Sorry, my guy. He needs to hook them up with their creators.
I mean, something like this for crypto, like, or creators that are more crypto native would be interesting, because like
that's what I've been thinking about.
Upside, but people they just fuck it up. They're just guaranteed to fuck it up. So I don't know.
But like where the real crypto opportunities for creators exist still just seems kind of elusive. Like meme coins obviously aren't it.
I wouldn't say. I think meme coins could totally be it. I just think that people haven't launched them very well for being an engineer project.
I think people don't really want to admit this, but the reality of every meme coin success is a small squad of creators.
100%.
Like,
yeah,
it just is that in a weird way. I don't know.
I guess I meant I meant more. I meant that more in like the social token. I'm going to tokenize, create a creator token and try to drive value to that, or like reward token.
I think it's more like, Mr. Beast launches a Mr. Beast token. That's one thing. But if it launched, I don't know, like a gaming focused L2, maybe that's a different. I think like all those opportunities are just, if given attention matters and trust matters quite a bit. People who, getting in at the top of funnel, people who are building that attention and trust, stewarding that to a level where you then have a huge asset you can launch things into. Whether that's other people's tokens, your own token, or who's well positioned to kind of come in and launch the on-chain bank as like an finance influencer or something. I don't know. I think there's opportunities there. If you can go if selling chocolate bars is a valuable thing and you want to go own a piece of that, I think tokens would be more interesting at some level. All right, what else we got?
Yeah,
what else we got?
So we got Inversion, which is Santi's new L1
Avalanche. Josh, did you get an answer to your tweet?
I want to find out. Apparently we have to listen to the podcast, which
I'll get ChatGPT to figure that out for us.
Yeah, exactly. But I think this is actually pretty cool. So Santi announced, he's launching an Avalanche L1 alongside his new private equity fund, really with a focus on acquiring traditional non-crypto businesses and upgrading them with blockchain infrastructure. Very explicitly not going after speculative use cases. These are, businesses with sticky customers, paying money for something, and he thinks there's a lot of opportunity to bring their operations on chain, kind of improve margins by bringing them on chain. I don't know, man. It's very ambitious. I love that someone's doing this. Very interested in seeing what like categories of businesses he's interested in, or like sees as being kind of good initial fits for this. So maybe he talks a bit about that in the podcast. But I know you like this, so curious what your thoughts were.
Yeah, I think like if networks are sort of in this evolution of firm to network, there's some new opportunities. I think, the PE Berkshire Hathaway applied to on-chain is interesting. And we're talking about vending machines, rev share tokens, etc. Like it is very unlikely that, I guess there's a big opportunity, I think, to take established cash flowing businesses and to bring tech into them. And I think that's, the last 10, 20 years has been about scheduling software and texting and all, route management and all this sort of stuff. What happens when you bring that into a blockchain based environment versus traditional environment? And I think there's like a lot of really intriguing things you could probably go do there. But I think at its core, the idea of just buying revenue, bringing it on chain and expecting some sort of multiple on it, I think is a fairly reasonable bet to make. And I think if we start to look at that list of L2s or infra that's being built out, the big question is going to be, show me the revenue. And so I think running at the revenue opportunities directly, when you're structured to both be able to go and acquire them and to monetize them, very interesting. I mean, and I think that this sort of PE type of opportunity will exist for, any of those top chain consumer products, right? If you have the distribution and the attention, your ability to bring in pieces, like integrate pieces into your environment that are good businesses in other places, I think will make a ton of sense. And I think what Santiago is doing here is saying, well, actually, you don't have to be limited to the issuance of token, the trading of tokens, or the buying and selling of tokens to think of where revenue might come from. We can go look at the traditional economy and say, people buying subscriptions or yada yada are ultimately good business to be a part of, and maybe we get some multiple on top of that for bringing it on chain. So I think a lot of people are doing this, not in this most so overt way. I think Base and Coinbase are very much doing this, though maybe less from a revenue perspective.
I think it's going to be a pretty obvious like AI opportunity here too. Less so with inversion, but just like when like the Cognico opportunity, these like AI first kind of company opportunities start getting figured out. Just go buy these companies with established customer bases and just rip the inside out. And
yeah, I have a number of friends who've done sort of the roll up of service-based businesses. Boomers retiring, looking for and a lot of these businesses have been run from spreadsheets, and being able to bring in some software really changes everything. I think that AI opportunity there is also going to be big. Like
huge. The challenge is just it's very unsexy work, so most people are just unwilling to go do it. So
God, if you just print some of these businesses.
Well, even just I've had friends that have tried to do this too, and just trying to find the right businesses and go through all the diligence and the lawyer fees.
Running a fucking course on how you can go do it, you probably missed the opportunity. But I don't know. I know that there's probably 5 businesses around my little town here that are literally just making a good living for folks. They've been doing it for 25 years. If you rolled them up, you'd have a good time. I mean, I don't think you'd have a good time. Home-based like service businesses are been there, done that. Thank you. Not the most compelling business to be in, but I don't know. You like people. You like smashing your head against the wall as you have employees. You want to have a good time. As soon as AI can handle employees and the management of employees, that's great. I wanted to make a suggestion for another link that we should get into in the future, Josh, and it was a exploration. It's a tweet I shared in our chat yesterday talking about the difference in NFL and NBA capturing value from their ecosystems, and so I'm just going to tease that because I think the question of whether a token could solve some of the economic alignment problems that the NBA has versus the integrated value that the NFL is able to create. So maybe we'll pause that conversation.
We'll do that. We'll do that one next week. I actually I had it earmarked and didn't have time to actually read it and decide if it was going to be a good topic. So all right, so next week we'll get into that.
NFL captures all the value and attention in a very clear, consistent way. NBA and many of these other sports, so much of the value is actually created by podcasts and the cultural relevance around it, and they do a less effective job of capturing that value. And so the question he poses basically is like, what would you change? How would you change that? How would you solve for that? So it's interesting.
I mean, I've said that. Oh, C is coming. Yeah, I think this is just so C's coming. I think their V2's out. That's actually pretty decent. But I think just thinking through, there's so much pent up demand to dump this token that I think just thinking through like what they could possibly do to actually like make this token launch not a failure is actually a pretty fun exploration. I mean, that I tweeted it like kind of jokingly this morning, but also not that they actually should do that. They should basically start this at an absurdly low market cap, single sided liquidity, kind of just like catch everyone off guard and turn them into buyers instead of sellers, and see that chart go up, and suddenly like the sentiment of OpenSea completely flips. And
so I literally this morning just put a $50 bid in on will OpenSea airdrop happen before April, and it's trading at 37 cents right now. So
you said you took yes?
Yeah,
I like it.
I mean, isn't that an announcement? Like, what's going on here? Like, why are these markets so separate?
I mean, they said in the tweet, they said that they're taking their time to get it right. So maybe,
okay.
I don't know.
I would just like you guys to know that I am on the come up on Polymarket right now. I have, after horrendous losses, like a streak of losses where I just wasn't taking it serious. We are up over the $1,000 mark again.
Let's go.
And it's been my Canadian election bets and my NHL hockey bets, along with my Super Bowl call, that have just been really great wins. I feel a lot of momentum behind me.
I had a pretty decent NFL season on Polymarket.
It is the leading consumer app for me right now, despite the fact that I don't really do a whole lot on it. So, nice header. Thank God the creative revolution fun. All right, give us a final one, and we'll let people get. Oh, we did.
Yeah. So I think really, I think that whatever, that was hilarious. That we're dropping the digital token. The creator revolution is finally here. I actually think the interesting thing here is just seeing what's happened with Pangu, and it's just kind of continues to be down only. Not many bids. Clearly, like them launching that token was like peak hype and attention for the product. Obviously, lots they can go do, and Luke is a killer, so
it's up to date, baby.
Okay, yeah, but whatever. So really, it's just like how does this not follow the same trajectory?
But this is like the part of the cycle right now where people are actually where we're going to see if like the old like consistent way of doing it is actually has any more legs. Truly.
Yeah. They're also they're launching it on Solana, which I think is interesting. It's like their entire community's on ETH. They've done nothing in Solana before. It's like that. I don't know.
It's a tough one.
It's a tough one. Tough one.
I would not be a day one buyer of this. But we'll see.
No.
I mean, I think the big opportunity is to do something different right now in a market generally. And so if you have a whole bunch of attention, you're also...
But they just don't seem to, right? And it's like, if you... Like, yeah, who are the buyers of these things, right? Presumably, if you would have been, you have a doodle because you, whatever, like the community or believe.
Yeah.
Then you're getting an airdrop. Are those people, like, eagerly going to be buying more? I don't know.
Your biggest believers are unlikely to be buyers on day one.
Yeah, exactly. So like
they're sellers.
who
They're
is
most likely to be sellers on day one. So
and I think the world looks pretty different if there's an on-chain business model here, or like they've built on-chain products that have users and blah blah blah. But I think we had I'm blanking on his name, Doodles guy on the show 2 weeks ago, and they're very much running this like kind of like marketing studio playbook, and how that translates into a successful token is kind of difficult to see.
I mean, if it does, it's bullish. I don't know. I mean, I like they will have all the incentives to launch this at an absurd FTV and to watch it bleed. The flip side of like, how do you go consistently build up higher cost basis holders is kind of limited here, because all that demand is going into the NFT with the expectation of an airdrop already, and so
assuming like the right way to use these drops are these token drops are as like huge growth moments, right, and acquisition moments, and like the best possible way to do that
very expensive
is not very expensive ones, but the best way to do that is to like create an environment where we want to buy, and it's like, oh shit, like, I got some. It's like, oh, they launched this at 10 mil. Oh shit, that's clearly undervalued. Doodles is legit. Buy a bit of token, 2x's. Oh, maybe I'll go see what they're up to. Versus this is at a $2 billion FDV. It's going down. I'm out. I'll see it.
But, it's very large VCs that are pushing this. They're saying, if you do not go do it this way, your token will not be valuable, and therefore you won't be able to go do all the things you want to go do with it afterwards. And so I think it's just bad advice now.
It's just a very short-term view.
Yeah. Cool. All right. What is this character called? What is I like the vibe of this. The piece. Do we have a name for this guy, or is it just?
I don't know. It's the up 1% Wojak. That's all I know.
Okay. That's what I was looking for.
Yeah.
It seems like a good enough answer.
Yeah.
Oh, we got some revenue generating tokens. See, this is what I'm talking about.
Yeah.
We like it. All right.
Yeah.
I'm excited to see some of these. I'm excited about Doodles. I'm excited because I think everyone has a chance to do something slightly different or new, and the value of doing that is so huge compared to just copying and pasting somebody else's stuff. So I'm just optimistic that somebody's going to do something interesting. Maybe Abby will be at the core of it.
Damn it!
Oh, this is actually kind of a fun one.
Yeah,
it's like a little AI drop where you have to basically convince Abby to not ghost you.
Nice.
Ugh. What are you going to tell her?
I wish that. I mean, you have to actually text this number. I wish I could do it.
Yeah, you
do. It's cool that it.
Can you not? You have to text her. I think you can do it in stream.
You can.
I think so. If you click the message icon, it doesn't.
It opens up iMessage.
Oh shit! Okay.
Classic. Yeah, it's dope. And she left me on red, so it's not going good. Happy about it.
All right. Well, let's see. We'll report back next week if you've got Abby and her friends on your side. Do we have anything? All right. Well, we're back next week, Friday, 10 a.m. Pacific, 1 p.m. Eastern. Internet Explorers. Until then, you can go have fun on the Pump.fun app.
Mobile app.
The apps are coming, baby. Let's go. I got nothing else. See you next week.
Thanks for tuning in.
Brand new look, same meme fun. Pump.fun.
I'm very confident.
Internet Explorers.